Okay, question 5. Let's solve question 5. Question 5. Somebody should help us read question 5.
Alhaji Oluwambe is a trustee of a settlement created by late Chief Jumbo in favor of his 4 children, grandchildren, and others. He submitted the following information to Ogun State Board of Internal Revenue for assessment purposes for the fiscal year ended December 31, 2024. Interest received 3.5 million. Dividend net 14 million. Rental income 10.5 million. Business profit 31.5 million. Miscellaneous income 5.6 million. Trustees remuneration fixed 787,500. Let me scroll up, sir. Variables 3% of gross income. Fixed annuity to grandchildren. Ojo 87,500 naira. Let me scroll up, sir. Benga 52,500. Administrative expenses 4,550,000 naira. Additional information: the trustees made discretionary payments in line with the trustees' deed of the beneficiaries as follows: Banke 262,500, Abidemi 350,000, Sukomi 437,500, Olajire 315,000. Each beneficiary is entitled to 1/6 share of 1/3 of the distributable income. Capital allowance agreed with relevant tax authority was 7,350,000. You are required to compute accessible income in the hands of each beneficiary. B. The net accessible income in the hands of the trustees.
Okay, thank you very much. Thank you. First, accessible income in the hand of each beneficiary. Second, the next accessible income in the hand of trustee. While you are computing the taxation of trustee and estate, first thing you need to do, you need to gather all the income received from this Alhaji Oluwambe estate. The name of the owner of the property, the owner of the business is called Alhaji Oluwambe. So we can call the heading Alhaji Oluwambe Estates. No, the name of the property owner is called Shijombo. So we call it Shijombo Estate. So I will start from question B because we cannot get question A without solving question B. So we have to start question B first, which is the net accessible income in the hand of trustee. How do we get that? What we need to do in this question is for us to add all the income together. We need to do what? Add all the income together. All the income, we need to add it together. Starting from the first income received by this estate is what? Interest what? Interest received. Can we all see that? Can we see that?
Yes, sir.
Hello? Okay. So I'm thinking of using Excel to solve it, like my colleague normally do. Can I use Excel to solve it? Or I should explain?
Use Excel, sir.
Hello,
Shijombo
sir.
Estate. Yes?
Please, is the material available? I
Please,
don't have the material.
let me reshare the material. For those who are just joining, let me
I'll
reshare the
send
material.
message. All right, thank you, sir.
Please, let me reshare the material. They will reshare it now. Can we go ahead?
Yes, sir.
computation of accessible income in the hand of trustee. The year end in this question, what is the year end? For 2024 year. Now, that means preceding year basis. That means this will be 2025 year of assessments. (2025) year of assessment. So, what are the income earned by this estate? What are the income earned? First, income, interest received. I'm coming so that we can see it very well. Interest received. How much is the interest received? How much is the interest received?
3,500,000.
3,500,000. Followed by what? The next income is dividend. Dividend. Can we all see that? What is your question, Folashade?
No one has sent the material and the topic. I don't even know the topic.
We started the topic last week, taxation of estate, trust, and settlement. Please, let me share the material to the group chat. I've sent the material last week now. Hello?
Yes, sir. Just join your class.
It's okay. We'll share it for.
Okay, please let me share it. Look at the dividend. They write dividend net. Anytime we want to compute tax, when an investment income is in net, what do we do? Remember, under personal income tax, what do we do to this dividend? We need to gross it back to 100. This dividend is stated at net. That means withholding tax has been deducted from this dividend. We need to gross it back to what? To 100%, which is gross. For us to get the gross amount of this dividend, is going to be 100 over 90 times the net amount. How much is the net amount? 14 million. So 100 divided by 90,000 times 14 million. So that will give us 15,556. Can we see that? After dividend, which one is next? After dividend, we have rental income. Rental income rental income. How much is rental income? The rental income is how
10
much?
million, 10,500,000.
7,500,000. After
10
rental income,
million,
which
10 million, sir, 10 million.
after
10
rental
million,
income, which one is
500.
next? We have business profit. How much is business profit?
31,500,000.
Business profit means adjusted profit. 21,500,000, Abby?
31.
Okay, 3-1. Anytime you have business profit, which is called adjusted profit, what do you normally minus from adjusted profit? Before adjusted profit can be assessed to tax, what do you minus?
Allowance.
Capital allowance. So I will less capital allowance from this adjusted profit. How much is capital allowance? How much is capital allowance? Look at the end of the question.
Okay. 7,350,000. It's 24 million.
So the balance will be 24,150,000, Abby.
Yes, sir.
So after business profit, which one is next? After business profit, which one is next? After business profit, which one is next? After business profit, which one is next?
Miscellaneous
We have
income.
miscellaneous income, Abby.
Yes, sir.
Miscellaneous income. How much is the miscellaneous income?
5,600,000.
5,600,000. So everything, that will be how much? That will be how much? We need to add do we have any other income apart from this? No any other income again. So what we need to do, let's add all the income together. All the income, let's add it together. What is our total income? Addition of all this. This is our total income. 59. This is our total income. This is our total income. From this, our total income, we less authorized payments. We less authorized what? Payments. What are the authorized payments? Administrative expenses. Please just give me 5 minutes. 5 minutes. Okay, we are back. Less authorized payments. What do we have for authorized payments? What do we have for authorized payments? One of the authorized payments that we have is called trustee remuneration. One of the authorized payments that we have is called trustee remuneration. So that is one of the authorized payments. One of the authorized payments that we have is trustee remuneration. For the trustee remuneration, how much is trustee remuneration? We have fees. Trustee remuneration, the one of fees. Fees, trustee remuneration. That is how much? 787,500. 787,500. Another trustee remuneration again. This one is what?
Variable.
Variable.
3%
What is the rate
variable
of variable?
gross income. 3% of gross income.
Of gross income.
Gross.
Total income in this taxation of estate and settlement. Total income means gross income. Do you understand? Times 3%. Apart from trustee remuneration, another authorized payment that we have is called fees annuity. Fees annuity. For the fees annuity, what are the fees annuity here? Ojo. How much is Ojo fees annuity?
87,500.
87,500. The next person is who?
Benga.
Benga. How much is that?
52,500.
After that, we now have administrative what? Expenses. Administrative expenses. What are the administrative expenses? 4,000,000.
4,550,000.
Any other expenses again, aside from all these expenses captured? We don't have any other expenses again. No any other expenses. So since there is no any other expenses, what you need to do, addition of the authorized payments. Let's add the authorized payments. Let's add all of them. Can we see that? The addition of the authorized payment is 7,256,667. This will be removed. This will be removed from total income. If you remove it from total income, you get what is called computed what? Income. You get what is called computed income. How much is computed income? 52,048,889. Once you get your computed income, what do you minus? We need to understand the format on taxation of estate and settlement. And in tax, the easiest way to understand the topic is for you to study the format very well. So apart from when you learn from this computed income now, you learn what is called discretionary what? Discretionary payments. You learn discretionary payments. What are the discretionary payments here? Who collects discretionary payments? Let's name them one by one.
Banque,
First one, banque. How much for banque?
262,500.
Followed by what?
Abidemi,
Abidemi. How much?
350,000.
Followed by what?
Sukomi,
Sukomi. How much?
437,500.
Followed by
437. Excuse me, size 437. 437. 437.
okay. Next,
Olajire,
Olajire. How much?
315,000. 315,000.
300 and what?
15. 15.
Any other one?
That's all.
So addition of the discretionary payments. Let's add them. Let's add them. By adding them, so we get what is called net computed income. How much is our net computed income? 50 million. Our net computed income. $50,683,889. That is our net computed income. Once we get that, we now less. What do we less from net computed income?
Frank investments.
We less frank investment income. In this question, what do we ask as frank investment income? Dividend. Dividend. How much is dividend? How much?
15,555,000.
So we get distributable income. Distributable income. Distributable income. Distributable income. What do we have as distributable income? $35,128,333. What will happen for this distributable income? $35 million. Abi? So this distributable income, in the question, how do we share the income to the beneficiary? Who are the beneficiary in this question? Who are the beneficiary? Who are the beneficiary? Who are the beneficiary? Hello?
Banke.
Who are the Who are the beneficiary?
Banke.
Both the children and the grandchildren. Both the children and the grandchildren. So starting from who? Let's read the question very well. Be careful. Let's read it. Both the children and the grandchildren.
And others.
So direct relationship of that late person, children and the grandchildren, they are the beneficiary. So I will start with Ojo first. Ojo. Second is who?
Benga.
Third is who?
Banke.
Next,
Abidemi.
Abidemi.
next.
Sukomi.
Sukomi.
Now, how do we share it in the question?
Olajire, sir.
It's remaining one beneficiary.
Olajire.
It's remaining one. There are 6 in number,
One
Abi.
Yes.
beneficiary.
Olajire, one of the children.
Olagiri. So, how do we share it?
The 1/6. If beneficiary is entitled to 1/6 share of 1/3 of distributable income.
Okay.
Now we need to do this about the
What we need to do first, we need to remove
1/3 1/3
one
of
third. Abi,
distributable income.
we need to
Yes,
Yes,
remove
sir.
it.
Yes, sir.
We need to remove it. Share. of distributable income. The share of distributable income. 1 over what?
1/3 of that.
That means once we remove this 1/3, the balance is called remainder what?
Remainder in the hands of trustee.
Yes, remainder income in the hand of trustee. This is the question B that they asked us in question B. Now, let's share the distributable income. How much is the distributable income?
1/6 of the 1/3. So that be 1/6 of 11,700,000.
I can say income available
For distribution.
for distribution. Income available for distribution is the income available for distribution. Each of them will collect
1/6.
1/6 times 1 divided by 6. That is what each of them will collect. That is what each of them will collect. Question A. What is question A saying? What is question A saying? Question A said what?
Accessible income in the hands of each beneficiary.
Accessible income in the hand of beneficiary. Accessible income in the hand of beneficiary. Computation of who are the beneficiary? What are the accessible income? Who are the beneficiary?
We have Ojo, Benga, all of them. Banke, Abidemi,
First,
Sukwani, and Olaji.
Ojo,
Benga,
Benga,
Banke,
Banke,
Abidemi, Sukwani.
Abidemi. We have Sukomi. We have Ola
Olaji.
Gire. Now, what are the benefits each of these beneficiaries receive from this estate? What are the benefits? Somebody receive, some of these beneficiaries, they receive
Fixed
what?
annuity.
Fixed annuity. How much? And who and who?
Ojo and Benga.
Ojo and Benga. 87 for Ojo, Abi?
7,500.
Yes,
Yes, sir. It's 7,500.
87,500.
Benga,
Why for Benga?
52,500. 52,500.
52,500.
52,500. This one, Neil. Neil. Apart from this, what other benefits? Another discretionary what?
Discretionary payments. Discretionary payments.
We did not include them. Once it's Peter and Nana. Abi? Is that this one?
Who received discretionary payments?
Banke, Abidemi, Sukomi, and Olajiri. 350 for Abidemi. 437,500 and 315,000.
5,000.
Do we understand?
Yes, sir.
Apart from this, what other income
Yeah,
that they collect?
it's,
Distributable
that's proper.
Distributable what?
income.
Income, Abi? Every one of them collect it.
Yes.
How much?
1,195,744.
The same amount. So, in that case, the accessible income will be this. Do we understand?
Yes, sir.
This is the accessible income. That is what the examiner asks us to do in A. So, do we have any question? So, in the absence of no question, we are done with. We have some other question under this trustee that you can solve, and I provide the solutions there. So, in the absence of no question, let's look at another topic called stamp duties. Stamp duties. Stamp duties.
The working note, please. I'm copying it, please. The working note.
Stamp duties. Can we all see the screen? Can we all see the topic in the screen?
Yes, sir.
Yeah.
Huh?
Yes, sir.
Yes, sir.
What is stamp duty? First, we need to start with stamp. Stamp simply means an impress or mark that is used to indicate a document. It is used to put a sign or symbols in a document for acknowledgement of receipt or acknowledgement of payment. Now, what is stamp duty? Stamp duty, they are the tax or levies imposed by the government on every written document and electronic transactions. Stamp duty is a tax or levy imposed by who? By government on a written document and electronic transaction for the purpose of making it a legal binding. For the purpose of what? Making it a legal binding or serve as an evidence in the court of law or serve as an evidence in what? In the court of law. That is stamp duty. When you have an agreement between two or more persons, that agreement, you sign an agreement with your vendor or we sign an agreement with your client. That agreement, to make it a legal binding, you need to take it to court and pay stamp duty on it. So that in case of any dispute, you can tender it as an evidence in the court of law. This is called stamp duties. What are the type of stamp duty do we have? Type of stamp duties. There are two types of stamp duties. Number one is called fees duties, while number two is called ad valorem duties. Number one type of stamp duty is called fees ad valorem duties. What is fees duties? Fees duty, they are those duties that the value does not vary based on the consideration of the document. This duty, the amount charged will not vary based on what? The consideration of the document. That means in fees duties, irrespective of the value of the document, either is 100,000, either is 100 million, either is 10 million, you are still going to pay a fees amount. The duty you are going to pay, the tax you are going to pay on that document will not vary based on the value of the document. No, it is fees already. That is fees duties. I think one of the modifications made to stamp duty in this Nigeria Tax Act is that some of these fees duty are now being transferred to variable, which is ad valorem. Example of fees duty, fee stamp duty. What are the example of fee stamp duties? Certificate of occupancy, power of attorney, guarantor form, prosy form, memorandum of understanding, ordinary agreement receipt. All these, joint venture agreements, all these are what? Fees stamp duty. We have another one called ad valorem stamp duties. What is ad valorem stamp duties? These are the duties in which the value varies based on the consideration of the document. These are the duties in which the value varies based on what? Based on the consideration of the document. What this one indicates is that in ad valorem duties, the amount of stamp duty you will pay will be based on how much is the value that you paid in the document. Assuming you sell a land, how much do you sell the land? Is it 100 million? If it is 100 million, that means your stamp duty will go up compared to 10 million. This is ad valorem stamp duties. This duty varies based on the consideration of the document in the transactions. The amount of the duty will be based on the value of the consideration of the document in the transactions. Example of ad valorem duties is called deed of assignment, sales agreement, tenancy agreement, lease agreement, insurance policy, contract agreement, vending agreement, increase in share capitals, debentures loan, promissory notes, etc. They are all ad valorem duties. They are all ad valorem duties. Now, the next thing that we need to look at, is what are the administration of stamp duties. Let me take you to type of stamp duty. I want to explain something. There is a particular question that was asked in about 3 diets ago. They said you should mention 10 instruments subjected to stamp duty. What are the 10 instruments subjected to stamp duty? The question did not ask you fixed. The question did not ask you variable. That means you can take either fixed or variable. You can take either fixed or variable. You can take from the fixed. You can also take from the variable. Since the question did not specify whether it's fixed or whether it's variable, you can take any one of them. So they are all the instruments subjected to stamp duties. Now, let's look at administration of stamp duties in Nigeria. Who administer stamp duties in Nigeria? Who administers stamp duties in Nigeria? Number one, stamp duty is administered by both federal inland revenue and state internal revenue. Stamp duty is administered by both federal inland revenue and what? State internal revenue. If the transaction is between an individual, the stamp duty will be administered by state internal revenue. But if the transaction is between company, the stamp duty will be administered by federal inland revenue. Now, the officer responsible for the administration of stamp duty, either in the federal inland revenue or in the state, that officer name is called Commissioner of Stamp Duties. That is the officer responsible for the administration of what? Stamp duties. The officer is called Commissioner of Stamp Duties. Is the one responsible for the administration of stamp duties. Now, what is the timeline for stamping an instrument? Time for stamping of instrument. That means, what is the deadline for stamping of instruments? Instruments may be stamped either in 40 days or 30 days. It depends on the type of the instrument. Assuming that instrument is a fixed stamp duty instrument, that instrument must be stamped within 40 days from the date of execution of the transaction. If the instrument is a fixed instrument, the instrument must be stamped within 40 days from the date of execution of the transaction. But if the instrument is ad valorem, the instrument will be stamped within 30 days from the date of execution of the transaction. However, when you fail to stamp an instrument and the Commissioner of Stamp Duty was aware that you failed to stamp an instrument within the timeline, the Commissioner of Stamp Duty will give you an assessment, a stamp duty notice of assessment within 21 days. Within 21 days. That is it. Now, what are the methods of stamping that we have? What are the methods of stamping that we have? Or manners of denoting stamp duties? What are the manners of denoting stamp duty or method of stamping that we have? Section 5 of the Stamp Duty Act states clearly that stamp duty can be stamped in this following method. Number 1, employing a die impressed. Number 1, employing a die what? Impress. That means you need to put a die on those documents, an ink. You put an ink as a sign of stamping on those documents. You put an ink on those documents. Affixing a printed stamp. Affixing what? A printed stamp. Affixing a printed stamp. What does that mean? You put a printed stamp. All those stamps issued in the post office. A printed stamp. The stamp issued in the post office. You put it on the document. Affixing a printed stamp on instruments. All those printed stamp, the stamp in the post office, you attach it on the document. Another one, direct electronic printing. Direct electronic printing. What does direct electronic printing say? This one, you have to print on the document as a sign of stamping. This one, another one is called electronic tagging. What do you understand by electronic tagging? This one is commonly used in the bank. They use it to receive a document. So it will tag it electronically. Another one is issuance of stamp duty certificates. Issuance of stamp duty certificate. You give a certificate of stamping on the document. Issuance of stamp duty certificate. You issue a stamp duty certificate on the documents. So these are the method of stamping that we have. Now, what are the penalties for late stamping? Penalties for late stamping. What are the penalties for late stamping? Penalties for late stamping. If you fail to stamp an instrument within the timeline, you are going to pay a penalty. The penalty will depend on the amount of the stamp duty. Assuming the amount of stamp duty is no more than 20 naira, the penalty for late stamping you will pay will be 20 naira. But if the amount of stamp duty is more than 20 naira, the penalty you will pay for late stamping is going to be 20 naira plus 10% interest per annum. If the amount of stamp duty is more than 20 naira, the penalty you pay will be 20 naira plus 10% interest per annum from the date of first execution of the agreement. When the 10% interest is accumulating and it is up to 100%, you will not charge further interest again. That means first year, 10%, second year, 10%, the accumulation is 20%, third year, accumulation is 30%. That means when it reaches 10 years, the accumulation will become 100%. There will not be additional penalties again. Do we understand? Do we understand?
Yes.
These are the penalties for late stamping. Now, what are the instruments exempted from stamp duty? 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 One of the instruments exempted from stamp duty is called admission as military advocate. Admission as what? Military advocate. When you are admitted as a military advocate, you don't need to pay stamp duty on your admission form. No. Another one, when you do an affidavit or declaration of age in the court, you don't need to pay stamp duty on it. Another one, agreement or memorandum for the hire of laborer. Agreement or memorandum for the hire of what? Laborer. You hire labor, you sign an agreement, you don't need to pay stamp duty on it. Another one, transfer of government shares. When you transfer government share, maybe to your children, to your wife, to anybody, you do transfer of ownership, you don't need to pay stamp duty. Any note issued by central bank, like treasury bill, treasury certificate, when you subscribe for those documents, those instruments, you don't need to pay stamp duties. So all these are the instruments exempted from stamp duties. Now, let's look at Commissioner for Stamp Duty. Commissioner of Stamp Duty. Who is the Commissioner of Stamp Duty? Who is responsible for the administration and management of stamp duties? Commissioner of Stamp Duty is appointed by Federal Inland Revenue. Commissioner for Stamp Duty for FRS is appointed by the President. While Commissioner for Stamp Duty for every state is appointed by who? By the state governor to manage the administration of stamp duty. This Commissioner of Stamp Duty, they will be under FRSO, but they are appointed by the President. What are the functions of Commissioner for Stamp Duty? What are the functions? General administration of stamp duties. Office. General administration of what? Stamp duty. They are the ones that administer. They admit the affair of stamp duty. Another one, assessment of stamp duty on instrument. Assessment of stamp duty on instrument. They determine the amount of stamp duty you are going to pay on an instrument. They are also the custody. They take custody of all stamping material, including dies and stamp. Custodies of all stamping material, including dies and stamp. They are the ones that take custody of it. They also sign the instrument to be stamped. They stamp and sign the instrument to be stamped. They also educate the stamp duty payer. They create an awareness and tax education for the duty payers. Last function of Commissioner for Stamp Duty is They account for the duties collected. Commissioner for stamp duty account for what? The duties collected. They provide account on the duties collected. This is one of their functions too. Now, where we are going to stop today is called electronic stamping. Is an electronic process stamping is an electronic process of stamping what? A document upon payment of the approved duties. Electronic stamping is an electronic process of stamping a document upon the payment of the approved what? Duties. And generates receipt of payments. And generates receipt of what? Payments. Electronic stamping is a process of stamping an instrument or document upon payment of approved duties electronically and generate receipt for payment. What e-stamping means, when you want to pay stamp duty, you don't need to go to stamp duty office. You don't need to go to stamp duty office. You pay online. You send your document online. Everything you are doing it electronically. You are not doing it manually. That is what? Electronic stamping. So by next week, we are going to continue from here. By next week, we are going to continue from here. By next week. Do we have any question, any query, any observation?